Part 1, we identified the 4 market phases: accumulation, markup, distribution, and markdown. In this video, we explore accumulation in depth, that of phases A to E. Here we explain how the well-funded, the smart money, institutions operate and build a position. In addition, how to identify the movement and take advantage by taking a position. And if you enjoy the video, don't forget to give us a like, subscribe, hit our notification bell to stay updated on our latest videos. Please take a read here through the disclaimer and the copyright. And here we have a classic Wyckoffian accumulation schematic. And the accumulation pattern or schematic can also be broken down into 5 phases: phase A, phase B, phase C, phase D, and finally over here, phase E. And phase A here, in its simplest terms, is the end of the previous trend, the downtrend, the initial turning point. Now, if you think of the price cycle and its cyclical nature, the phase before accumulation was markdown. Price was trending lower, ergo supply. Sellers have been in control, and this would be coming down from markdown into phase A. The PS and the selling climax show us something different. Okay, it shows the emergence of demand as in buying, and this hasn't occurred previously within the downtrend, within markdown. And identifying the selling climax is rather easy. The spread of the bar or candlestick will be very large, along with the volume, and the volume should be high, should be very high, as this is where the CO, the smart money, are offloading, potentially offloading positions from distribution. They're banking their profits and or buying shares as they may be accumulating a new position. And this is why the volume of a selling climax is extremely high. Volume should be considered and is activity within the market. The selling climax bar halts downside progress. It stops markdown, the downtrend, and buyers start to emerge all within the same bar. So if you think that every bar is a representation between buyers and sellers and volume is the activity, one could say that there has been a great battle between the two forces, that of selling and buying. And this is it. This would be the selling climax bar. This is where the buyers have made their stance. This is the transition between the sellers into buyers, the end of a trend into a new era. The market is shifting into a new environment. And this is incredibly powerful information for a trader to understand. And the automatic rally precedes the selling climax. And this should, but not always, produce a good rally, preferably the best rally since the downtrend began. And this move within the market is often momentum from the initial buying from the selling climax, further buying from and or short covering giving further fuel. Lastly, to the secondary test. And here price will usually test near the bottom 25% of the selling climax bar. And this test is essentially looking for sellers. Low volume and narrowing spreads are indications of a lack of supply. Oh, I nearly forgot PS. And PS is preliminary support. Essentially, in its simplest terms, is the first indication of meaningful buying within markdown, represented on the chart with an increase in volume and spreads. Basically, a potential indication that markdown, the downtrend, may cease. So within phase A here, we have, say, preliminary support, the selling climax, the automatic rally, lastly, the secondary test. And now to phase B within accumulation. Once again, in its simplest terms, the core principle behind phase B is for the CO to acquire stock as cheap as possible. This is where the CO, the smart money, are accumulating shares for what they deem to be cheap, to be of good value. And this phase is the longest, as it can take years in some cases to build a large enough inventory ready for markup. And within phase B here, there will be further secondary tests, some upthrust type actions. But most importantly, towards the end of phase B, we need to see volatility decrease within the waves, the swings within the accumulation trading range. This tells us that supply is exhausted and or has been absorbed, ergo a lack of supply. What do I mean by volatility? We want to see the downswings show a lack of volatility. So if we look within phase B here, in the beginning there were some large down waves, and usually accompanied with this there will be some good wide spreads with perhaps volume like so. But towards the end we can see that down waves are certainly decreasing. We want to see spreads narrow and volume decline dramatically. Along with the angle of descent, we want to see it flattening out. We don't want to see it coming down hard like this. We need to see that supply has been absorbed. And that's reflected on the chart with very narrow spreads and very small, minimal kind of pullbacks. This shows a lack of volatility. Then don't forget, our CO, the smart money, is building a position and wants to take price higher, much higher during the markup phase, phase 2. And a lack of supply means frictionless movement, as in it will require very little buying to push the market higher. But if there are active sellers in the market, this can cause potential problems for the CO, because he will need to further test or potentially absorb the selling. And of course, absorption means money. You have to buy the selling. Ergo, the lack of volatility here in phase B, specifically the downswings, signifies that supply is exhausted and is ready for phase C. One last topic I must speak of within phase B lays the cause. Phase B effectively builds a course that provides the energy for the uptrend, markup. We will speak of the cause being built, which is a key Wyckoffian law known as the law of cause and effect, at a later date. So on to phase C here. So within phase C, there is something known as a spring. The spring breaks the support from the accumulation trading range, reverses back up to close firm. This encourages weak hands who don't understand the accumulation structure to sell. They're expecting the downside trend to continue. So think about it. We're in markdown here. We have some kind of support, some level of support. Then the market breaks through support. They're expecting price to resume its trend to the downside. Perhaps they're not privy. They don't understand the accumulation process here. They're expecting the downside trend to continue. And or this spring type action may induce other participants to cover who were perhaps smart enough to take a position early on, as this would be a logical place for a stop placement. So this would be the final capitulation, if you will, before markup. Another phase C event instead of a spring would be known as a shakeout. In this instance, within accumulation, a terminal shakeout. And shakeouts will invariably penetrate deeper through support, like so. And it will take more bars to recover back above support rather than reversing on the same bar like a spring. The terminal shakeout is more of a violent action that will literally shake the weak hands out of position. If they're long from over here, for example, And it would also induce a bear trap of sorts, because this would be such a large penetration of a support level. You will have a lot of breakout traders to the downside who are expecting lower prices. Yet, as price returns, these short players are caught off guard. They're now in a poor position. So following the spring will come a test. And this test is testing the spring essentially for sellers, supply. After all, price did manage to break through support. And don't forget, before markup, higher prices, the CO needs to make sure supply is low, is weak. There is low selling pressure. Therefore, the test itself should have minimal supply. And this would be represented by having considerably lower volume than the spring and narrowing spreads. And if supply is high, further testing would be required. As you can see here, we have one further test. Now, phase C does come with some slightly different textures and looks. For example, if phase B has been efficient and has mopped up supply, phase C may not spring. And this can make phase C a little bit more difficult to identify. To phase D, here within accumulation. In the simplest terms, demand should now be in control within the trading range. Swings to the upside should be longer in duration with less meaningful weak pullbacks. For example, we can see here, look at the good rally here, look at the good rally here, and these little pullbacks will be very shallow. And the price action for these pullbacks should have very narrow spreads again with low volume, flattening out, showing no real selling pressure. And conversely, the good up waves in duration, we want to see evidence of good buying. We want to see wide spreads and increasing volume. Evidence of this can be seen by rally known as a sign of strength. It's a strong rally in duration and decent price action with wide spreads and good volume that breaks through previous highs and the resistance from the accumulation structure. And it breaks into new highs. A way to interpret this move is that we now see a commitment for higher prices from the buyers, i.e. the CO, the smart money. Post sign of strength rally over here, the breakout, the last part of phase D here, this needs to be tested. The breakout needs to be tested. Because the breakout itself will have an increase in activity. And as we know, activity is volume. Ergo, before markup begins, the CO, the smart money, needs to make sure there is no supply. Because the breakout itself, as I've just mentioned, usually has an increase in volume. And the sign of strength rally needs to absorb any willing remaining active selling participants. And this is reflected in the volume as we break on through. Any sellers that wanted to sell here at resistance, these are absorbed and we break on through. And this one last test over here is known as the backing up action. And lastly, over here is into phase E. And this within accumulation is simply confirmation that buyers are in control. Price moves higher effortlessly before we transition into a new environment, which of course is known as markup. And within phase E, certainly favours taking place to the upside going forward, as these have a higher odds of success. One could make a case that the beginning of the new trend starts at the lows within the accumulation structure from phase C and continues through phase D into phase E. And this would be the correct teachings of Wyckoff. However, the market in phase D and especially C, price is still in its accumulation environment. It has a few more steps through to completion to truly finalize the accumulation process. So personally, as price breaks through the sign of strength high over here, I consider this to be the new environment, the markup phase, a true trending environment. And this is where I recognize the new trend. And the causality was built within the accumulation phase, and the effect, the subsequent trend, markup occurs as we break through the sign of strength high. Let's apply newfound knowledge to a case study. So here is BlackRock. It is a stock and the largest asset manager in the world. It has $10 trillion. Yes, $1 trillion in assets under management. This was around Jan 2022. And for context, there is currently around 40 trillion in circulation around the world, meaning that BlackRock manages a quarter of the world's money. And yes, we can apply Wyckoff schematics to BlackRock, ticker BLK. So here's our blank chart. Now onto phase A within accumulation. Preliminary support over here. Note the volume. Note the spreads. They've increased. There's a little buying here. Onto the selling climax. Then to the automatic rally, which does produce the best rally since the downtrend has begun. And the AR, the automatic rally in this case, would be labelled another Wyckoff term known as a change of character. And we will discuss this and use it in the next video. But let's keep things for now to the basics. From the automatic rally, there is a deep secondary test that actually breaks the lows of the selling climax, yet is met with good buying. Note the spread over here. Note the volume. There's an attempt to hold here. Now we move on to phase B. We see some churning here at the beginning, but we do see evidence of good buying. In comparison, we do see some pretty poor selling. So the buying is better than the selling over here, although there are still a couple of down bars here. Then we have a secondary test over here that is met with huge volume. Look at the volume coming out here. This is known as effort versus result. With all that activity, of course, being volume, price is unable to break support. Ergo, someone is buying here. Someone is stopping the market move lower, stopping downside progress. And this, of course, we could label as the CO, the smart money. In regards to effort versus result, this is a Wyckoffian law that we will discuss in depth via the next video. And again, we get another little pop in volume over here at support. Well above the average. So someone is buying at the lows, and this is incredibly clear to see via the volume spikes. Now, in addition, there is also a lack of volatility and supply. Spreads are narrowing down here. Look at the volume. Look at the very small spreads. As to over here when we're trying to come down, look at the spreads. So we can see that this market is showing good characteristics. There is a lack of volatility towards the end of phase B. This is exactly what we want to see. Phase B is about accumulating a position, and the lack of volatility towards the end is suggesting that perhaps supply has been absorbed. So into phase C, the spring. Now don't forget, before markup, the CO needs to make sure there are no active willing selling participants going forward. Yet there is high volume here and here, right at the structural location of support within our accumulation schematic. Price breaks down under these lows via the spring. And this will of course induce a bear trap. Traders who think the downtrend will continue will sell down here. Breakout traders. And this will also get rid of weak longs who position themselves correctly, say over here or over here or over here. Note the volume here. There is a spike. And think of this logically. The only force that can stop lower prices here is buying related. So we have all this effort, as in volume, and restricted price movement. This is effort versus result. And of course, Who's buying here? Well, this is the CO. This is the smart money. Then boom, supply has been mopped up. Look at this move here on low volume. This is telling us that supply has been absorbed. We come to the test of the spring, even lower volume. Beautiful. This movement here from the spring action we'd call ease of movement, which we will discuss in the next video. I'm trying to keep things to the basics here. From the spring and the successful test, we move into phase D. We have a last point of support over here that produces a sign of strength rally above recent highs and above the automatic rally high over here. We have just broken through the resistance from our accumulation schematic into new highs. And then we have some backing up action over here, which holds the level of support which would be made from this price action over here. Phase D in a nutshell is about seeing buys in control, which is evident. We have good rallies, breaking structural areas with decent spreads and little selling. And this should be the buying dominant phase that is reflected via the price action. And then finally, price continues into phase E, driving higher with increasing volume, showing that indeed buyers are in control. So here is another example of accumulation with a little known company known as Apple. And both of these companies were cherry picked to hopefully give the magnitude and power of using the Wyckoff method. The accumulation schematic occurs within all markets, stocks, commodities such as oil, gold, forex markets, crypto, ETFs, indices, etc. And it will manifest itself on all time frames. Truly amazing. Anyhow, back to Apple here. So we have a blank chart. And then we go firstly into phase A. We have preliminary support over here. Note the volume. Note the spread. Then we come into our selling climax. And then the automatic rally. Once again, this has produced the best rally since the downtrend has begun. This is also known as a change in character. Then on to the secondary test over here. Technically a down bar from the previous bar, but in price action terms, this retraces very deep into the lows of the selling climax bar, but we have found buying. Why? Well, because it closes well off the lows on the highs. So someone is buying down here from the secondary test. I wonder who could be accumulating. I wonder who is positioning themselves down here. Well, of course, yes, it would be the CO, the smart money. Into phase B, and here we have our secondary test, and which this could be labelled as a spring as it penetrates the lows reverse and we close back above. From here going forward, volatility and supply decreases. Exactly what we want to see towards the end of phase B. Don't forget, the purpose of phase B is to mop up supply. Remember what I said about volatility. Look at the beginning here. Look at the spreads. Look at the way we're moving down. Then look at the movement over here. Look at the spreads. Very narrow spreads. Very low volume. Look at the down move over here with this volume. So towards the end of phase B, we are seeing that indeed there is a lack of supply. Beautiful. Textbook. Very, very nice. Into phase C, where we spring the lows of the secondary test. And also note the high volume here. This high volume is known as effort versus result. With high volume, there is a lack of movement to the downside. And volume is activity. So what are your thoughts regarding this activity? Well, it's our CO. It's the smart money. They are buying down here. They are accumulating. And we get a good close off the highs. A beautiful test. They are accumulating shares, building their position. Don't forget, as we break down here, the weak hands would be selling. As they sell, they would buy. Ergo, we have a fairly small spread with high volume. And the weak hands again being the breakout traders who are expecting lower prices as price was coming down. This was support. As we break down, they're expecting the trend to continue. And or again, people who may have positioned themselves correctly over here, or over here. This would be a logical place for a stop placement, and this would be triggered. From the spring, price returns back inside the trading range. A good little rally that breaks these highs over here. But the spring is tested over here, although I must admit the move here is a little bit laborious. But nonetheless, price does hold a higher low. Into phase D, we get a good rally, advancing north, breaking these highs. We have a little reaction, volume reduces. This indicates a lack of supply, picture perfect, and forms LPS, last point of support. Then price rallies through resistance, producing a sign of strength before the backing up action here into phase E. Now the importance of phase D is of course to negate or see no signs of supply, as this should have been absorbed within the previous phases. And one can eyeball the movement from the lows of the test to the sign of strength. A great rally here. Look, let me just clean this up. We get a good rally here with evidence of no supply. We have the best rally in duration. This is a great sign of strength rally. And one last aspect to acknowledge regarding this process is the lack of volatility here in phase D. Look at the volume and movement from phase A. So this is phase A. Look at the way we're chopping up and down with wide spreads. This is the volume. And phase D over here, we're breaking into new highs. Look at the spreads and look at the volume. This is an indication there is a lack of supply. This is beautiful. Phase D, lack of volatility, is another confirmation that supply has indeed been mopped up. There are no active sellers. Look how easy it was to drive up here into new highs on very relatively low volume. Before we move into distribution, let's summarize accumulation. So phase A is all about stopping the previous trend. Phase B, building cores, mopping up supply. Phase C here, testing action, the insurance, the double down. Phase D, demand overcomes supply. We want to see that buyers are in control with a little selling friction. Before phase E, we break out into trend. Beautiful, clean, succinct. And just for your references, preliminary support is the first attempt to halt the downtrend. Volume and spreads increase. The selling climax stops the downtrend. It's most volatile, ultra high volume and or spread. Automatic rally. It's a bullish rally, often the largest rally since the downtrend began. The secondary test. It tests supply via the selling climax low. The unup thrust, which is testing resistance boundaries, returns back to range. It's a temporary break. We haven't discussed that, but I felt compelled to share this with you. We have a spring, which is testing support boundaries for supply, the climax low, the support from our accumulation structure. Then we test the spring. It's testing the spring for supply. Then the LPS, the last point support, is bearish reactions. They're unable to test the support boundary and create higher lows. So this is our accumulation structure. So we've been testing down here, springs, then we test. Then from phase D onwards, the last point of supply, we want to get good rallies, then very small reactions that are unable to test down here. Ergo, we create high lows as we rally back above this swing high. Sign of strength. Price advances with decent spreads, volume and duration. Again, with minimal reactions. We want to see poor selling before backing up. It's the last reaction before markup. To help cement the newfound knowledge, we have constructed a free interactive workbook full of the charts found within the course. Go to our website www.acmetrades.com and explore this resource. That's all, folks. Thank you for listening to this video. I hope you found it informative and extracted value. Don't forget to give us a like, subscribe, hit our notification bell to stay updated on our latest videos. We value your feedback and suggestions, so please leave a comment below and let us know a topic you would like us to cover in future videos.